Welcome everybody to this week's edition of Selfwealth Live. Thank you for everyone for joining us, and thank you, Jason, for helping us out once again on this glorious fine day here in Melbourne. How's it looking up there in Sydney?
Bit damp today, Rog, but that's okay.
Yeah.
We've got to mix it up. We can't get heat stroke every day, so it's nice to have a couple of clouds come across sometimes and cool us down.
Fair enough. Yeah. Well, when I say Melbourne, I'm specifically working from home during these days, and that's in Geelong. So we generally get worse weather than Melbourne. Sometimes better, but it's good that we finally get a bit better weather than you than up there in Sydney, Jason. That's all I'm going to say. So what we're going to talk about today is general markets, how they're looking. We're going to talk about a topic which for me, it's like I experience a lot, and it's sort of FOMO, like fear of missing out when I have an opportunity I see and I didn't get in, like how we could potentially get in again. So that should be interesting. Your take on that, Jason. And then we're also going to talk about some what you're looking at, what stocks you might be interested in, as well as some ones from viewers as well. So I'm looking forward to getting stuck into that today. If you've noticed, I've noticed I haven't really watched our videos back, I'll be honest with you, Jason, but I always notice that I have a lampshade that goes into my head, and it kind of looks like I'm a puppet. All right, so I've actually moved that lampshade away from me just to improve the background there. I don't have any fancy books for everyone to see, unfortunately, like I see a lot of other gurus, but then I'm not the guru, right? So, but yeah, I've removed that lampshade away from my head now, and I don't look so much like a puppet. But Jason, that doesn't matter. You've got a lovely picture behind you. Maybe you can tell us a story around that picture.
Yeah, it's actually this Aboriginal work, and I went to a home contents auction. It was years ago, and turned up, and there's this old Federation house, had all this amazing stuff. What they do, the auctioneers get the property, and then some of the stuff is from the property, and then they bring in all this other stuff to sell off as well. And it just appeared in front of me. I had no idea on art, and the bidding started, and I put my hand up, and then it went bang, bang, bang. They said, "You got it." And it's like it was a blur, and they took it away. I didn't know what I'd bought. And after the auction, I went around, I wonder what I've got. Had a look, and oh, that's okay. And there you go, picture in the background.
Beautiful, very good. Aboriginal art, you said, is it? Is it from a? Do you know like where, what area?
Yeah, an artist called Gloria, just goes by one name, Gloria. Yeah. And it's bush medicine leaves. So she's famous for these bush medicine leaves. She's got a whole lot of variations of it. And it's a beautiful piece, and just works perfectly for the spot. Just a bit of luck really in the find.
Fantastic.
Which is a bit like looking for stocks. You just never know what you're going to get, and that's why we use these momentum strategies and things which you don't know you're looking for. They appear in front of you, and this is where some of the best results, whether you're looking for art or whether you're looking for a stock, they can come when you don't expect them, and in areas where you mightn't otherwise be looking. But we'll get into that today, and as we do every week, using that momentum, finding those ideas and those stocks to put the spotlight on, which are worthy of further attention.
Yeah, exactly. I agree. Now, just while we're on the art subject here, do you invest in art yourself? Because this topic come up in my family the other day, investing in art. What's your thoughts?
Look, for me, it's about like, where do I have an edge? Where do I have a skill which I think puts me a little bit above maybe where the mainstream is. I think I have that with financial markets, with stocks, where I look at charts. But when I come to looking at art, I don't have a clue, and it's so I don't do that, because it's like
no clue.
If you don't have an edge, you're really handing money to those who do have an edge and do know what they're doing. So I think no matter what it is that you do, it's about working out. And if you can't say what your edge is, you probably don't have one. Like, what's your process? What is it that you're good at pulling apart and identifying, and focus your attention on that. So I'm not an expert in this and that and whatever else, but I do know financial markets. I know charts. I know stocks, and so that's where I put much of my attention.
Fair enough, Jason. All right, well, let's put our attention on our regular disclaimers, if you can, Jace.
Yeah, general advice today. Everything we talk about is general only, nothing personal. I'm also not part of Selfwealth. I'm Motion Trader. So just put up our disclaimer we put up each week. That just tells you all that. Gives my licensing details, gives Selfwealth's licensing details. And as we say, general commentary only.
Yeah, thank you, Jason, and don't forget to like and subscribe before you forget. Send us a message via the comments. I love reading the comments, and I do it every time. Even as a few comments, a few likes, it does make me feel a little bit nice inside. So thank you very much, guys, for all the support out there. I appreciate it. I'll be honest with you, this is the first time I've done something like this. It's not the first time for Jason, but it's the first time for me. So, and for Selfwealth, it helps build out another edge, I should say, in education as well, because traditionally we're always teaching a lot about fundamentals, whereas technicals is a bit of a neglected thing in our industry, I think. So I'm glad we were able to bring this to the audience. So Jace, how I've been watching, I had Bloomberg on the side here, and they are talking about us not far from breaking all-time highs on the ASX 200. How's it looking there?
Yeah. I think we're going to see a new all-time high for the ASX 200. Look, anytime, could be today, could be tomorrow, it could be this week. It's we're just on the cusp of it. I'll get a chart up, and we can talk around what's been going on in the local market. So it's it's been a really encouraging week. We've had further buying come in since we spoke last Wednesday, and it's all come around from this 50-day moving average. So we had the nice rally during November, December, pull back to that 50-day moving average, and we spoke about this last week in that there's a cluster of supports around there, so you can just use those Fibonacci's, which we like to put on sometimes, giving a guide for a pullback. And it's been a nice pullback back into that Fibonacci region, back to the 50-day average. And this is where we're really looking for buying interest to come in, for buy the dip to come in, to give some extra confirmation this rally that we've had is the real thing. And it's last year a lot of the rallies were distribution events. So the market would rally and then it would quickly come back down. What's different about this one so far is that it's pulled back, but it's finding that support, and we're seeing that strength re-emerge. Big overhead resistance here at 7,640-ish, 7,650. It's around about there. It's not a precise point. And you just compress this, and you can see why. We've got three tops in 2021, 2022, and then the most recent one. So I think this has been. We've had that big rally off the COVID lows, and I think we've been in a big holding pattern for 2 years. I think we're coming close to ending that holding period and seeing another period of rising prices. And with the market now so close to these all-time highs, it's kind of within reach of traders and market players just giving it that push, getting it up to the all-time high. The thing for me will be whether if we do see a breakout in the next few days, is it going to be a sustainable break, or will the ASX then need to pull back and do some consolidation? Because we need to keep in mind this has been a big rally off the October lows. Markets just don't keep rising in that linear trajectory month in, month out. They do pause and they do consolidate. Look, any push to an all-time high, it's that's the question for me. How sustainable is it? Have we done enough consolidation just in the last few weeks? And I think this is the really big thing, in that we actually don't need to know. We don't need to know whether a breakout now will be sustainable or whether there'll be a pullback. You don't need to predict that. It's not about who's got the best prediction. It's more a case of having a strategy that can adapt to whatever happens. So for me, that's about what I'm doing. I'm long stocks, and I'm keeping my upside open by by staying long stocks, but then I'm also using what we call a trailing stop to help manage risk. So should the market break higher and then pull back, it's I've got an exit strategy if the market does start to give way and start to really come back. But also my trailing stops are nice and wide, so they're wide enough to see off a bit of a pullback, a bit of choppiness before maybe then a relaunch higher in the weeks or months ahead, should that sort of scenario play out. And I think the important point about the strategy I'm using is that I'm positioned if stocks run now, but if they reverse and they reverse hard, well, I've got a way out. And if they reverse and just consolidate for a few weeks, I can probably see that through. I'm not really rushing at the moment to add a whole lot to my portfolio, just with the market sitting beneath this key resistance point. But Roger, if we get a breakout and we get breakouts in individual stocks, I'm happy to go with that strength.
Yeah, it's looking positive. I know a lot of the clients that I speak to are very bullish as well and very positive around all this. So generally, sentiment has a big part to play, I think, doesn't it? Really, when it comes to these things.
Yeah, it does. It's sentiment is as sentiment turns positive, that's what fuels an upward trend. It's when everyone's the gloomiest is often where you get the bottom. When everyone's the most positive is when you get the top. But as the pendulum starts to swing from bearish into positive, that's when you can really get a good part of an upward trend, as you've got that weight of money coming back into the market as sentiment is turning more optimistic.
Yeah, definitely. Just got a few people here in Perth and WA, really bearing the heat. Speaking of our conversation before about how hot it is, it's 38 degrees over there. So I'm kind of glad I'm not over there, and I hope you guys have got some good air conditioning over there. What about the US markets? They are also once again peaking, I think, aren't they?
Yeah. Look, it's good to have a look at the US markets while we're on this topic. And so I've got the S&P 500 up here, and this has been a really strong run. It's up nearly just in the last couple of weeks. It's put on nearly 5%, which is a big move in a large index. It's interesting to see how far this market's run since the last time it's touched its 50-day moving average. So I've got two moving averages on the screen, the top one, the red one being the 50-day and the blue one being the 100-day. I find they work well for the medium-term approach that I have to markets. So since it last touched the 50-day, it's up close to 15%. So that's come quite a long way. Not without precedent, but it is getting to the upper bounds of where these markets run between moving average touches. So I'll show you what I mean. We just look at a few examples, and look, we can just take this most recent one. So you can see a 50-day moving average touch in May last year. Market ran 12%, and then it came back, touched the average. And we can go back to a previous bull market, so the 2020 to 22 bull market, and you can see all these rallies where the market rallies, comes back, rallies, comes back, rallies, comes back. It's just this ongoing sequence. Over here, rallies and comes back. So just measuring that one out. So we have a rally off the moving average, got up to 19.5%, nearly 20%, then came back. So the current rally is not quite as big as that, but it's sort of getting up there. And you look at the one after that, and it's like a 14% rally, so kind of where we are now. Then the market comes back. So it's not calling a top in the market, anything like that. It's looking for where the markets had become extended and needs to pause. And you can do this exercise yourself just by calling up a chart and going through, and you see this repeats time and time again over the years. Sometimes you get these big extensions, and then it comes back hard. So that was a particularly big one. That's 17%. But we're around 15% now. So, you see that markets do get stretched. They do come back. Not suggesting we're heading for this, but it's where you just start to say, okay, look, how do I manage my position when a market has come that far? So for me, it's a case of, from a new investment perspective, I don't think this is an asymmetric time to sort of be getting into the market for the first time. So you watch this rally over the last couple of months and go, oh, look, maybe it's time to buy. I'm probably not so comfortable doing that, because I do think there is a heightened possibility that we do get some sort of a pause, some sort of a pullback towards the moving averages. Doesn't necessarily mean it's going to be a big decline, but nonetheless, it's a pause. So from entering a new position, I'm not so keen unless there's a individual stock. It's got a breakout. It's got its own reasons. Looking at the index from that perspective, but look, we have an undeniable uptrend, and I think the play really is to keep holding stocks that have been rising. So if you're in the market, you've been in there for a bit, you've got some stocks, I'm not looking to take profit. I want to see how far this can go, and I'm using those trailing stops, nice wide trailing stops, giving the market room to move, giving my stocks room to move. And I really think that's the best way to keep upside open while managing risk. And you think all through this rally, there were people selling all the way up, taking profit because it had a good gain, but the money's made by staying with the trend, seeing how far it can go, giving it room to move. Just while we're on the US, just have a quick look at the US small caps, because this is an interesting sector. This is the Russell 2000. And it's so what's been happening here? It's not making new all-time highs like the S&P 500 and the NASDAQ, which are really being driven by a few of the large caps. But overall, I think it's positive. When you compress it, you look at it. We've had the big bear market. It looks like we've got this large basing structure in place, which has taken 18 months to 2 years to form. Moved up to a new, a 2-year high just a month or two ago. Pull back to the moving averages, starting to rally off it. Got some overhead resistance, but I think this is a really encouraging looking chart when we look at the potential for what could happen over the months ahead. If we do get a little bit of sideways price action now, then that potentially creates a platform for a sustained rally throughout the year. So I'm optimistic we're going to see higher levels in the US generally, and also in this small cap space. I think that's the area where there could be some really interesting opportunities over the next year.
Yeah, it's interesting to see because there was a period there a few months ago where the small caps weren't keeping up with the larger indices. Is that right?
Yeah, look, they've really been, the small caps locally as well have really been stuck in the mud all for the last 12 months. Like, look at the decline these stocks had from July down to the October low. It was a larger decline than we saw in the big stocks. Just looking at the small ordinaries, the local market, you got this same sort of situation in that. We had the big rally and we had the big decline, and then what looks to be like a large basing structure just over the last couple of years. A couple of attempts to break down, so they look like false breaks. There was no follow through selling. The market looks like it's found that point where the buying interest is there to underpin it, and now the tension seems to be on the upside. Market has now moved above these moving averages. The moving average is now rising, which is the first time that's happened for some time. And like the Russell, the small orders is just consolidating below the December peak, and it looks like the dip's being bought. Looks like the dip's finding is being underpinned by interest to accumulate. And now we're retesting this overhead resistance that comes in around 2,940. So it seems that the overall momentum in the market is starting to turn positive, and this is something which could continue on for many months. It's not to say that every week the market's going to go up, but just means that underlying tone, it's looking really encouraging. I think we're in for a better year in the small caps than we've seen in the last two.
Yeah. Speaking of small caps, just got a question here. And does small caps in the US equate to similar small caps in Australia? I'm not sure if that means.
Yeah, no, the US small caps are much bigger. So your typical Russell 2000 stock. I looked at this a while ago. I can't quite remember, but I think something like $2 billion might be a US small cap, where it's much larger than what a local small cap would be. So you look, the term small cap is going to vary from market to market, but it's the smaller end relative to the rest of the stocks in the overall universe.
Yeah. And once again, I think I'm going to go back to sentiment myself here. I think if you get enough drive through the larger caps, it's definitely going to drive some influence into those small caps as well, as people get more positive, right, through sentiment. So
and you want to see that. You want to see a broad-based rally, not a narrow rally. We always get, you often see the commentary and around where a rally's narrow, and we heard a lot about that in recent times, with it being like, they talk about the Magnificent Seven driving the majority of gains. It's when you get breadth in the market, where you've got participation from the small stocks through to the large stocks. That's the definition of a healthy bull market, where all the players are, well, not all of them, of course, but a great deal of them are participating.
Yeah, for sure. It gives people, a lot of other people, a lot more opportunity as well, right? Because getting into small caps is a bit easier. So what about our other market we offer at Selfwealth anyway? And I guess it just gives the opposite picture a little bit. Is it recovering, the Hong Kong market, at all? Or
Yeah. Look, interesting. Just to have a quick look at that, because of course in the news with Evergrande going under, just in yesterday's news, and looking at the Hang Seng, the Hong Kong market, there has been. It's interesting to see the market has rallied on the back of that Evergrande wind up, and we often see this where when news is anticipated, and then it actually comes out, the market often does the opposite to what you think may happen. So you see, Evergrande's collapse. You think, oh, well, the market will collapse, but market kind of knew all about that and knew that was coming, so it's not a surprise. So we've had a rally in the market because a lot of people are already positioned for that type of outcome. And of course, that's not the only thing going on. It's just one of the factors driving the market. It's a little bit like all the gloom scenarios around October 2022 and also into 2023, where so many people were calling for a recession, and the market was positioned for the worst. And then as the worst didn't happen, it became evident that the worst probably was less likely to happen. The market has rallied and those negative positions have been unwound and new money's had to come back into the market, and it pushes it upwards. Markets don't do what you think they. This is why prediction's so hard, because you predict all these people predicting a recession that turned out to be wrong. But if you're looking at the price action, you see the markets became resistant to further falls, start to move upwards in spite of what was still pretty uncertain news. And so, as I always say, you follow the price action, not the headlines. But just quickly wrapping up on the Hang Seng, it's we have had this bounce, but look at these moving averages; they're still firmly to the downside. I think the odds favour that the low isn't in. We've had this bounce, which corresponds with this previous low from 22, so that's an area where you'd commonly find some sort of support. But look, I don't think there's anything to do here. I'd rather than try and pick a low in Hong Kong, I'd prefer to run with the bulls in Australia and the US.
Yep, I think that's definitely the case. Looking at that chart, it's just flowing downwards there still. All right, well, let's we've had a good sort of summary of our three markets that we offer at Selfwealth. Let's have a chat about the topic of this week, and that is when you see an opportunity and you don't get in at that time, how would we re-enter that position? Jason, I've got an example for myself, but maybe I'll let you lead the way in terms of talking about this topic.
Yeah, look, it's such an interesting area. It's your classic tale of missing out, and where you've got an idea, you've got a stock, maybe you're watching a particular stock, and then it just you, for whatever reason, you don't get in, and then it runs, or maybe you're reading a report about a stock which has been running. And you go, oh, geez, if only I knew about that a little bit earlier, and you don't act, and then you go, well, what do I do? What do I do now? And quite often people will just say, look, I've missed it. It's too late. The stock's run. I can't get in on this idea anymore. And it's we end up with these psychological blocks which can keep us out of stocks which do really well. And so it's interesting because there are ways that we can kind of move around them. And just I'll go over get some charts going. And for instance, let's just say just an idea of like how people will say, oh, look, it's all too late. Just look at one of the boom stocks from a couple of years ago, Liontown Resources. So this was a lithium play. I remember this one was such a boom stock. So say you'd been looking at a stock like this, and you get an initial rally, and makes new highs. It's up something like a couple of 100%. This is typically where people say, look, I've missed it, and they walk away and say, look, I'm just going to leave this stock alone. I'm not going to play here. And but then the problem is these big trends, they can continue for a long way. So how do you manage that? And this is what we want to discuss today. You see that and you think it's too late. Then you see that and you're kicking yourself because you shut your eyes and said, no, I don't want to know about this anymore. So there are ways, I think, that these can be managed. And I think what I want to do to start by covering this, I thought it'd be good to look at. So you've mentioned there's an example from your portfolio. So we'll look at that. Let's look at that next. I'll start with an example from my portfolio, and this is a reasonably recent one. So it's this stock here. It's called Gentrack Group, and what they do is they provide software to utility companies. It's I hadn't heard of it before. I thought it was it's a fairly obscure company, and had a terrible time. Had a really a crash environment during 2019 into 2020. Then just this large sideways period of not doing very much. And I got a buy signal. So you can see the, and this was a motion trader signal. So my members got this signal as well. And you can see where the moving averages cross. The 50 goes above the 100. This little blue box, you can see this is where the price broke to a new high. So that was the buy signal. And this was back in November 2022. So if you cast your mind back to 2022 near the end of the year, well, the market bottomed in October, so it just started to get some strength coming back into the market, but it was a pretty uncertain time still, and I hesitated. I hesitated to get in. I thought, look, it's had a bit of a run. The market's pretty shaky. I'm just going to watch this for a few days, see whether it stabilizes. Then I can get in if it starts to push to another high, starts to get back about $1.70. And so I left it for a couple of days and looked at the end of the day data a few days later, and this is what I see. It's just shot higher, and I missed it. I wasn't on board. I had the signal. I knew what to do, but due to the way I was managing my risk at the time, I didn't act when I should have acted, and I hesitated. And so this is what happens. So what do you do now? So like you look at this chart yourself and you just think, what would you do? What would you do if this was the situation you find yourself in? Can you buy this stock, which is just put on a quick, let's see, how much was that? Let me just measure that out. That's just put on a quick 40%. You're going to buy it now, or you're going to say, I've missed it. We'll work through what I've done. So what I thought I'd do, I thought, look, it is stretched above the moving averages. I'm going to see whether it stabilizes and see how the price action develops. So it did start to stabilize, and the price started coming back to the moving averages. And so this is one of the strategies I use for getting on board a stock which is run. It could be Liontown Resources, or it could be Gentrack, or it could be anything else. And we were talking about this earlier with the S&P 500 having an extended run above its 50-day moving average, and at some point it will come back. And it's one of the few things where we can say will, because at some point the S&P will come back to that 50-day moving average. Most of the time you'd never say will when you're looking at the stock market, because anything can happen. There's always uncertainty, but the moving averages are a bit like gravity. Price will come back to them unless, of course, the stock has taken over and it leaves the boards. But in this case, came back to those moving averages. I bought a position. I wasn't incredibly excited about it because I thought, look, I probably missed the bulk of this move, but you never know. Let's see how it plays out. And for me, it's really like, it comes down to it. Look, it's really a case, Roger, I think it's a case of balancing your regrets. So on one hand, you can say, look, if I don't buy, the stock will keep running, and I could look back and go, look, I've missed a really big profit. Or on the other side, you might buy and the stock might fall back and you end up with a relatively small loss. So you've got to weigh those regrets up. Which one are you going to find more regretful? Missing a big profit or having a relatively small loss? And for me, it's missing a big profit. Is I'm going to have more regret there than ending up with a small loss. So Gentrack, here's how it went. It didn't initially do much, and it just sat in the portfolio with many other stocks. And but then it started going and going and going, and taking us up to present day. So it's up about 160%. And through Motion Trader, through the signals I do through Motion Trader, there've been 6 additional entry signals through that as well. So the point is that there are many more buying opportunities in a stock other than just the first one. So this little blue box, that was that first entry signal. And if you said to yourself after that, I've missed it, I'm going to leave this stock, like look what you miss out for. Look at all these pullbacks to the moving averages, which can be additional buying opportunities, as well as breakouts. You've got breakouts from ranges, which are happening throughout this period as well. So there's different ways you can get on board this. Another strategy is you take a smaller position. And so, at least you're in the game, and might not be your ideal play, but you're on the field. And the thing is, if you're not playing, you can't win. You can't win by watching from the sidelines. So you've got to manage your risk. But I think it's best to have a way that you can get in, rather than just saying I'm not in at the low, so I'm not going to play. And look, not just about individual stocks, you can also applies to the index. So it's I think, Rog, really important that these strategies are things that people can think about and actually apply, and not freeze up by saying it's too late.
Yeah. So a couple of points there that I picked up. Basically, waiting for the price to get as close to the moving average as possible is one opportunity, obviously, to re-enter or to enter to start off with, or just waiting for another breakout after a consolidation, right? So they're the two main points. And it's funny, actually, you going back to my when I did a lot of personal development, learning about myself, I've been learning about how to become better, right? You touched on a point around whether you are someone who's more goes towards pleasure or pain, effectively. And a lot of people who learn about these things, it's, are you more attracted to the pleasure of profit, let's say, or are you more inclined to avoid the pain of loss, right? So, or to avoid the pain of loss. And I think that might dictate how you play these stocks, right? So depending on the type of person you are. I'm not sure if you're aware of what I'm talking about now.
Yeah. People hate losses.
People hate losses.
Our mental wiring is that we hate losses more than profits, is what I think the research finds. And I think this is why people have so much trouble with taking a relatively small loss, because they don't like to take a loss. And this is where the whole thing can unravel, because if you don't take a small loss, you may end up with a much larger loss, which becomes an even bigger problem. And people don't want to risk a small profit. They get a 10% gain and they don't want to risk giving that back. So they'll be inclined to take their small profits but run their small losses. So the whole thing gets flipped on its head and the wrong way around at that. So what we want to be doing is taking relatively small losses and running our profits, but mentally, from a psychological aspect, humans aren't naturally wired to do that. So that's one of the things that makes trading and investing such a difficult realm for a lot of people to excel at, because our natural wiring is to do the opposite to what is actually profitable when it comes to the way these markets operate and the way trends can extend. So understanding it is the first step to being able to do something about it, I think.
Yeah, and yeah, exactly. All right. Well, I'll tell you mine, which is just a sort of recent play from your book as well, Jason. It's Hum. Have you seen the I think I could have got in there at 50 cents, if not earlier. And I'm kicking myself.
Going really well, Hum.
50 cents. Hum, yeah, Hum Group. I'm kicking myself for not getting there at 50 cents, and look how it's just boomed. What are we waiting now, or what are we waiting for? The moving averages, or?
Yeah, it's so the got a motion trader signal around 54 cents, and we've had a strong rally. So it's a tricky one now. Like, what do you do? Like, the fear is that it just continues to just go skywards, and doesn't pause for some time, and that sort of thing can happen. This is where you potentially consider, look, do I just get half a position or a quarter of a position so I've got something on it? Then you can look at the chart and go, well, look, there's possibly going to be some overhead resistance coming in at around 70. It is stretched above those averages, so it would be normal for the market to have some sort of pause, and maybe that creates the entry to get in. That's sort of the way I played GTK. And just going back to GTK, you can see with my entry, I didn't wait for it to actually get back to the moving averages. I bought above it. I'd gone sideways. We're getting close, and I just bought there because you don't know. It doesn't have to come back to the moving averages. Could get close and run again, and that's kind of what happened. It got close and then it ran again. Although after that, it did come back to the averages. So we're not dealing in a certain environment. We never know how things will play out. So you're always balancing risk. Hum's it's just like that GTK example where it's given a signal and it's run quickly. A lot of stocks don't run quickly, but some do, and then you've got to work out, okay, what do I do next? There are a couple of strategies I'd look at. It's wait for the pause for the moving averages to catch up, or a partial position to at least be in the game.
Yeah, all right. Well, let's have a look at some of the misses that the crowders had here. And I'm not sure if this is a miss, but let's have a look at the Pro Medicus share to start off with.
PME, Pro Medicus.
Yeah. What does it look like now? And look, that's definitely gone.
So big uptrend. This stock's been an uptrend for coming up to 2 years, and you can see it's got all those potential entry points. So the classic fear, like someone would look at a chart like this possibly and go, I didn't get the low. The stock's now up 46%. It's too late. I've missed it. And then you look at how time plays on, and it keeps rallying. So a 46% gain can become a 460% gain. Not necessarily it will, but it can. And this is why we look for these returns to the moving averages. 50 and 100 days for me is what I think works well in this medium-term time frame. And you can see there's been multiple comebacks to the average. On this occasion, in May, it got below the averages, but never really broke down. The averages didn't cross to the downside, so you'd say that upward trend was still in place. And if you're uncomfortable buying the move back to the moving averages, then you're getting the breakout. You're getting the rally off the moving averages. As it starts to rally and make another high, then you've got other possible entry points along the way. So at the moment, it's like, well, it's currently running above those averages. It's a hard one to buy at present. If I had this stock, well, I'd definitely be holding it. There's no reason to sell it. There's no sign of an imminent top. But just from an asymmetric perspective, you go, well, I don't know that it's the ideal sort of entry point at the moment. Maybe I'd rather look for a retest of the averages and then a rally off them. But yeah, it's trending uptrend, and a stock I'd be holding.
All right. What about uranium in general? Jason, do you have a view on uranium?
Yeah, well, that's the same situation, in that it is in this big upward trend, and like who knows how long an upward trend can keep pushing. So this one would say really got underway from July last year. It's up something like, let me just measure it. It was 70%, but it might be more now. Actually, since the last measure, it's now up 113% from that July low. Pull back a bit. It's like at some point there'll be a big shakeout in uranium, and it will pull back significantly. Only problem is we don't know when or where that's going to be. It could double again before that happens, or maybe it's in the process of happening now. So it's a case of getting in, finding those entry points, and there are several points you could get into this uranium trend. And then for me, it's about letting that trend run for as long as it can, whilst using a wide trailing stop to try and see off pullbacks. And there will be pullbacks along the way. So far they've been pretty mild. The only pullback of any substance has been was in October, where the price came back 14%, but that's nothing. It's like, these things can come back 30, 35%, and you just think, if uranium came back 35%, that's bringing it back to back to these October lows. And like, for a lot of people, that's really difficult to sit through, but that's what you kind of got to sit through to potentially stay on these big trends, which could last for several years. Whether that'll be the case in uranium, we don't know. We never know which trends are going to be the mega trends, which ones are going to be the medium ones, which ones are going to be the ones that don't do very much. We only know in hindsight, and the way to stay on them, I think, is to use those wide trailing stops, let the market do what it's going to do, and some of them can just go an extraordinary distance, but you got to sit through some unpleasant pullbacks along the way.
Yeah, I really like that chart actually, Jason, because in that range that you've got there, you can actually tell the story even if we go before the breakout, right? The breakout was in July last year, right? Those lines where you've got the rising lows, right? You can really sort of say to yourself, all right, well, anything in the uranium basket now of stocks or this specific, I guess this is some sort of future index here or something you've got there. It just shows you it's primed to have a breakout at this point, right? That I really like that chart. So
yeah, Rog, that's a great assessment. It's I've left these lines on the chart from when I was analysing it back at the time, back mid last year, and I put these green lines underneath to show that we had a sequence of rising lows, and I said it was like a stepping sequence where it was kept stepping up towards the upper end of the range. And that's why I was encouraged with the uranium space generally, and had a positive outlook. But of course, we're still waiting for the breakout, and then the breakout came, and it was away. And there were plenty of opportunities around locally. There were stocks like Bannerman, Paladin, Boss Energy, which were giving us breakouts. This is a physical uranium ETF. It's listed on the TSX, the Toronto Stock Exchange. It's the only actual uranium play which I'm aware of, which is like physical uranium, which is investable. So that's why I use that as the proxy for the uranium price. And but look, it's all this this, and we never knew what was going to happen when we got the breakout. And sometimes you get a false break where the market runs a bit and then comes back. But if you like trends, you like following trends, it's the case. You've got to follow those breakouts and see where they go, and be prepared for a lot of them to do nothing exciting, but you manage your risk around those, and that's okay. And then the ones that go, it's like, let them go and see how far they go, and that's where the big money's made.
Yeah, but I mean, even just comparing that price action of those rising lows versus the moving averages, right? With the moving averages going sideways, you'd be going, this is a range. I'm not going to touch this. But if you just look at that price action, it's the perfect picture of a breakout about to happen, right? So good to be on top of that. I like it. I like that chart a lot. So I got a question here. Do you ever add to positions on new breakouts or pullbacks, Jason? Do you add to positions?
Usually I don't, because not that I've got a problem with adding to positions. Like it's called pyramiding. It can be a really good strategy, but I've got a portfolio of up to 80 stocks, and so I'm typically spreading my risk into more stocks rather than adding to positions in any single stock. Because like part of my strategy is about many relatively small trades. So the more I'm adding to a position, the more concentrated it's going to become. Again, it's not necessarily an issue, but I'm casting that wide net, trying to get into a lot of stocks, and out of that big portfolio, maybe 10 or 15% will run a long way. And that's where I'll make my money. I don't need to then try and work out, okay, out of my portfolio, which are going to be the best stocks. I'm going to put more money into those. Nothing wrong with doing it. It's just not the way I'm playing it.
Yeah. All right. And what about, let's have a look at AZS.
And one thing I would mention on pyramiding, I think a really important thing is not to, for anyone who does it, it's not getting your position top heavy. So say you buy, just using this chart as an example, say you buy one unit on the breakout, it runs a bit, and you go, oh, this is going well, I'm going to buy 2 more units. So now you got 3 on board, and it goes a bit more, I'll buy another one up here. And turns out your average price is just like maybe 5% below the share price. So it only takes a relatively small pullback, and it just wipes out the entire profit. So I like to keep the average price. The bulk of the position I'd prefer to put on early, and then maybe add smaller incremental units on the way up. So you keep the average price relatively low, rather than have that average really, really creep up and be really just underneath the current price. Too easy to get shaken out, and a good trend just turns to dust because you've been too aggressive at the latter end of the trend. And so, sorry, Rog, what was that? Was that AZS?
No, it's good. I'm glad you said that, actually, because I was just thinking of a question around that topic as well, right? It complicates things for me as well, so that's why I don't personally have the positions. It does complicate, but So one of the David missed out on AZS. What's that looking like right now? Plenty of room to move still, or?
Let's have a look. This, just looking at the price action, I think this stock's been taken over. I don't think this is a play anymore. It's flatlined, so I'd say it's no longer a proposition. This is a harder one. This is a really hard one. It's like once it really got going, it really didn't give you a chance to do much at all. The opportunities to get on were early on, where we had a rally above the moving averages, pull back, had another strong rally off the moving averages, pull back. So you could be buying the breakouts, like buy the pullback, and then buy the momentum to the upside again. And there were like several opportunities to do that, right up until around May 23. And then really from May 23, it's kind of just goes. And once it's up around $1.20 or so, it's like, yes, it goes further, but how do you manage the risk around it? It's too hard to manage your risk. Where do you put your stop? Your stop's got to be way back down under $1. So you end up saying, well, okay, I'm going to have to now now, risk 40% just to play. Yeah, so sometimes I think you probably do have to go, look, I have actually just missed this one because I can't manage my risk around it anymore. Would you want to buy it on the pullback to the moving averages at 250? It's like, I'd say probably not, because I'm thinking, well, what's my potential upside versus my downside? It's like, it becomes too hard. Often lots of opportunities to get on board, and there were multiple opportunities in this, but then it got to the point where it's not coming back to the averages. You're not getting clean consolidations. It just does get too hard.
Yeah, fair enough. Actually, Kirby mentioned for very strong stocks, they can bounce off the 10 and 20-day moving average. Which I like that. If you're a faster turn, if you like to trade a little more, then
that's probably, yeah, look, that's
CU6 is his. If we use CU6, just Jace, that's his example. Let's have a look at that one.
Okay, I'll go to that in a sec. But look, if you were using 10 and 20s, it works lovely, beautifully. Look at all these pullbacks you can get on. This is an exceptional trade. Not many stocks do this. So this shouldn't be seen as, oh, look, I can use 10 and 20-day averages and I can get these big gains. Not many stocks do this. This is, you rarely see that. So what was it? CU6. So this is a motion trader stock. I think I've got this in my own portfolio. And look, and just like Azure, it's coming back to that 10 and 20-day moving average. These are good, I think, if you want to be like, we call them a swing trader, where you're kind of looking for moves over maybe a month or two. You're not going to ride out big consolidations when you're using 10 and 20-day averages. You could use them in combination with like 50 and 100-day averages as well. There's all sorts of different things you can do, where you could be using these for entries, but then using the longer ones for exits. It's like, there's many strategies, there's many combinations. There's no holy grail. It's I think one of the big things is just don't overcomplicate what you do. But also using these small signals, you're going to get more signals that go nowhere as well. So, like, we've got a moving average crossover in March, didn't go anywhere, came back. So you're going to get false signals that go nowhere. But then it can help you get on some of these fast moving stocks, because you do get more pullbacks to them. So it really depends what you like to use.
Yeah, it's all part of that strategy. Once again, what's your trading plan? Actually, this is a bit of left field market we're going to look at here, Jason. I'm not sure if you've ever done this before, but one of the questions is, have we ever looked at the Mexican market? Do you know what?
I was just reading about that today.
Yeah.
I'll see whether I can get a.
I love Mexico, the country. I've never been, but I feel like it's a country I'd love. It's
a great place, really good place. I don't know what.
I was just Googling it. It says indices IPC. IPC? You type in IPC. So IPC Mexico.
That must be it there. Here we go. Well done. Thank you. Let's start. I'm going to start with a weekly. And this will be in local currency as well, which is an important point to consider, because I don't know what the Mexican peso has been, how stable that's been. I think it's maybe one of the more stable currencies in that part of the world. But if you look at the Argentinian market, well, the Argentinian economy is a mess, but the stock market's been hitting all-time highs, because the currency is going to just becomes more and more worth less and less, and money goes into the stock market. It's so it's not what you expect to see. So be interesting to see this in US dollars to see how it looks then. But in local currency, it's look, definitely got an upward trend there. Look, pull back to the moving average, starting to rally off the averages. Yeah, look, it's an interesting one, and probably need more work. You need to find the a Mexican US-based ETF and see how it is in US dollars, not just local currency, because it can really give. I'll give you a quick example of the difference currency can make. So it's so here is, this is the Brazilian market in US dollars. So this is using an iShares ETF, and it's an interesting play in US dollars. It's been in a big consolidation, some sort of a wedging shape. It looks like maybe it's starting to break upwards. Let me put on a weekly chart. This will probably tell the story better. But really, it hasn't been a great decade for Brazilian stocks. But now look at it in local currency, and it's a very different chart. You go, wow, this is a boom market. But if you sell your Aussie dollars, you buy Brazilian real, I think it is, buy the local index. Once you convert it all back to US dollars, yeah, it hasn't been so great. But if you live in Brazil and you're trying to protect the value of your assets, well, rather than let it sit in the bank, put it in the stock market, because the stock market's gone up a lot as the currencies come apart. So that's the thing with Mexico. Don't just look at the Mexican index, look at it in US dollars, because you could just see whether there's a strong currency involvement in those as well.
Yeah, right. It's a good point actually around the FX exchange, right? But actually, I've just looked up. iShares have a Mexican ETF, EWW, which you could probably get on our platform if you wanted exposure to that market. Is it listed there? EWW, iShares, or MSCI maybe MSCI.
Oh no, that's it there. EWW.
There you go. Yeah, you could probably get that on the US platform with Selfwealth. Look for it. Yeah, really interesting.
Yeah, so probably not quite as strong as what it was appearing in local currency, but nonetheless, there's still an upward trend there. It's just looking at what it's done. So say from the so I've got a week. So from the October lows, it's up 30%. NASDAQ is probably up something similar. So yeah, it's giving NASDAQ style returns at the moment. Interesting one to look at. I don't have a strong view on it, but looking at a daily chart, yeah, look, that's a nice upward trend. Come back to the averages. Yeah, look, there could be some more upside in that, but yeah, it's a market in an uptrend.
Fair enough. All right. Well, look, there's a few stocks in there which I'll list. I always write them down, so if we might run out of time today to go through them all. But what about silver? There's one in terms of less general rather than go to an individual one. What about silver, Jason? And is there any examples of stocks you might know of with silver?
Yeah, pure silver stocks. There's not so much. They tend to do other. Silver tends to be a byproduct of other metals like gold or maybe copper. Looking at the silver price, it's really like it's really stuck in this range at the moment. It's not one I think we need to rush into. It's also below these moving averages, so there is some risk that it does start to move to the downside. It could also start moving the upside. So I'd just like to see it come out of the range. The range really seems to be something like that. Roughly speaking, that's the range. When it moves out of that, well, then maybe it starts looking interesting. There are some silver ETFs. So SIL is a US-based silver ETF. So this has got the Global X Silver Miners ETF. This can be a good way to play silver, but the stocks really haven't done too much for the last what's that, almost 3.5 years. The momentum's not there at the moment. Not to say it won't come in at some point. I think it will come in. I think this could be a great trade, but who knows when. And then there's the SILJ. So that was SIL. This is SILJ. So this is the junior silver miners. So you'd expect this to have a little bit more volatility to it. So this could be a terrific opportunity at some point. Maybe we've got a basing structure, but I'd like to play. I'd probably be looking for breakout. For starters, let's say a breakout above this resistance at around 1060. That would probably get the moving averages turning higher. Price would probably be above the averages. That could be a relatively low entry point into a market which is maybe quite bombed out. There could definitely got a potential to double, and you look at what sort of risk you'd need to take. It could be done on 20%. So maybe 20% downside, maybe 100% upside. That would be asymmetric. Of course, I'm just theorizing because we don't have a breakout at this point, which may not happen, but just some idea of like how it could play out. Just being aware of some possibilities, some scenarios. Just a quick rundown in silver.
Yep, fair enough, Jason. Thank you very much. Now, I've got to ask you again. I said we weren't going to, but there is three. I'll just leave it this final three. Do you want to look at the three that have been mentioned here?
Yeah, let's go.
NEU, starting off with NEU. It's
Neuron Pharmaceutical, which I think has been on the tear. Yeah. I had this stock until recently. I got stopped out. I think in September. I had a trailing. I'd been on it for a while. I'd ridden this trend, wide trailing stop, but wide trailing stops don't work with precision. And the pullback was just a little bit too. Was just deep enough to get my stop. So it was a 31% pullback. What was it? It was a 33% pullback. I must have had a stop at around 30%. So it just nicked it and then went. So, that will happen. You don't get them all. As for what to do with it now, it's had a big run, still stretched above the averages. It's having a pause, but I'd struggle to buy it now. I go, what's my upside? What's my downside? It's if I had it, I'd still be holding it. But that capital's now moved into other stuff. If I've got it, I'm holding. If I don't have it, I'm probably a bit apprehensive to buy at these elevated levels.
Okay, fantastic. DRO, what are your thoughts about DRO?
Yeah, it's having a good day today. We've spoken about this a few times. We've got this big range that it had been in. You can actually draw some lines on it. So we've got the lower line, there's an upper line, and we also had this little congestion pattern it broke out of. Like, there we go again. Rally, back to the averages. Today's theme is back to the averages. Back to the averages, so it could have been bought there. Got a breakout from this little range above the averages, another entry opportunity, and it's been having a nice run since, hitting new highs today. Again, it's if I've got it, I'm holding it. If I don't, could wait for it to come back to the moving averages, could buy a small position, just get a toe in the water. It's like, who knows where it's going. This has been a boom bust stock. It could be another boom, which then another bust comes, or this could be the real thing, and maybe this time it keeps going. We just don't know. So it's like, it's the thing with the trend. Let the trend go as far as it can. Use those wide trailing stops. But in terms of entry, it's a trickier one now. Do you wait for a pullback to the averages, or do you establish a small position, or is it a mix of both? It's not a clear cut entry today at these levels.
Yeah. I think the important thing, once again, though, is you got to choose one or the other, isn't it? Really, are you entering on a breakout, or you're entering on a pullback? And I know for me, it's always just this psychological thing of eventually people have to sell enough for it to pull back at least close to the EMAs, right? So that's part of my trading plan. It obviously depends on what viewers think and what they're part of their trading plan, but have a consistent way of doing things, right, Jace?
I think you can do both. And my first plan of attack is buy the breakout. If I miss the breakout, I'll look at potentially buying a pullback, because you've got to get on somewhere with some of these stocks. So you can do a bit of the both. I think you're right. You've got to be consistent. So my big plan A underlined is buy the breakout. But sometimes things happen. You miss the breakout, and you've got to have your plan B. Where do I get back in? And that's where I'll sometimes just buy a bit of a position to get on board as the stock's running, or I might wait for a pullback. I had to assess each situation under its own merits. But
Yeah.
those fallback strategies can be better than just saying, "Oh, look, I missed the breakout. I've missed it." I think that can be the most damaging when you then look back and maybe 12 months' time and said, "Oh, geez, I wish I did something about it because it's up now 200%." And it's just you've got to have a way in some of these stocks.
Yeah, and you're suffering with the pain of FOMO. Lastly, MAD.
This has been a great trending stock. I don't know what it's doing lately, and now it's this was a motion trader stock for ages and ages. I think the motion trader entry was back in November 20, rode it all the way through until I think it was around October. This pullback became large enough to trigger the wide stop. So, giving it lots of room to move around, but then at some point, you got to rule a line under it and say, okay, enough's enough. Otherwise, you can end up riding some of these stocks all the way back down. So you've got to have that line in the sand. And that was breached for me. I didn't have this myself. It was in the motion trader portfolio, but that point was breached around October. It's had a bit of a rally since. Hasn't done enough to trigger a new entry, but now it's falling away again. This is one just to there's nothing to do here. It's trading within a range. It's below the moving averages, so it's not a buy. It's not a buy on the pullback to the moving averages because it's now below the averages, and that's a sharp sell-off. So if I had it, I'd be thinking, where do I get out of this? I could possibly use that low from October as a line in the sand. Maybe picks up a couple of extra points along there. Look, maybe if I had this stock, I might be putting an exit stop around $5.15 or 20 or something like that. Just see, maybe it does chop sideways for months and then breaks higher again. Completely possible, but I don't know. I could also just trundle sideways and then start to break down and head back down to 350 and below. We don't know. So it's about managing risk around what we don't know. And there's a lot we don't know. So it's when it's working, let it keep working. When it's not working, accept that we don't know where it's going to end up. So have a plan to protect your capital so you don't ride something which has been really good, potentially all the way back down to where it began, because a lot of stocks do that. Not saying Matter will, but lots do. So manage risk, underlined exclamation mark.
It's been a big drop in that stock, that's for sure, just the last day or two. All right, I think there's one more question there, but I actually like the topic. So, Talwyn, I'm going to have to leave you hanging until next week because I think we might use this as a bit of a topic for next week. Jason, thank you once again for your time. Whenever he says this was a motion trader stock, it is part of Jason's service, which is you can always visit them at just Google motion trader, and you will see his website there, and you can have a look at that. My name's Roger. I'm from Selfwealth. You can get 10 free trades if you're not already a member down the bottom there using that link. Please, thank you very much, everyone, for coming. Like and subscribe. Give us some comments. Give us some love. And I much appreciate everything and everyone. Jason, thank you very much, mate.
Yours, thanks for joining us. Rog, it's been great speaking charts with you. Hopefully some interesting things to think about for everyone.
For sure. Thanks, Jason. Have a great week ahead, and thank you, everyone, as well.